Now coming to the next topic, issue of debenture. The next topic under company account, after issue of share, the next topic is issue of debenture. You know that what is debenture? Debenture is a borrowed capital. It's a debts fund. For that company pay the interest to the debenture holder. For that, whatever the money the company take from the debenture holder, the company pay the interest on that amount to debenture holder. And here the interest which is paid to the debenture holder is a charge against profit. Company issue a certificate for the debenture. Company issue a certificate to the debenture holder under the seal of the company, which indicate when this debenture will be repaid by the company after the expiry of certain period, and whether the debenture is secured or unsecured, whether it is redeemable, unredeemable, okay, registered, unregistered debenture. So all these information is given by the company under that certificate. All information. It's a contract between the company and debenture holder. Between a company and debenture holder. That's why company issued this certificate under the seal of the company, where the company mentioned the amount of the debenture, rate of interest on debenture, when this will be repaid, whether it is charged against the assets of the company or not, means it's a secured debenture or unsecured debenture. Okay, and most important thing is what? Interest on debenture is a charge against profit, whether the company will earn the profit or company may not earn the profit. In both the cases, company have to pay interest on debenture. Even in the loss, company is on loss, then also the company have to pay interest on debenture. Okay, so interest on debenture is a debts capital, it's a loan capital, it's a borrowed capital. It's a borrowed capital. So debenture is defined under the Company Act 2013 section 2 subsection 30. Debenture is defined in the Companies Act 2013 under section 2 subsection 30 that the debenture includes debenture stock. Debenture includes debenture stocks, bond and any other securities. Debenture includes debenture stock, bonds and any other securities of the company, whether constituting a charge on the company assets or not. Whether a charge on the assets of the company or not, means whether it's a secured debenture or whether it's an unsecured debenture. Okay, what are the features? What are the features of debenture? Simple features. Number one, the company issue the certificate, debenture certificate under the seal of the company. This certificate is issued under the seal of the company by the company, which acknowledges the debts taken by the company, that this much debts is taken by the company from the debenture holder. It's a borrowed capital, it's a loan capital, it's a debts capital. It contains what it contains. It contains a contract. It contains a contract for the repayment of principal amount, principal sum at a specified date, after the specified date. So it's a contract for the repayment of debts capital, debenture amount, means the principal sum at a specified date. Third one is the maximum period for issue of debenture is 10 years. The company can issue debenture maximum for a period of 10 years, not above than 10 years. But infrastructure company can issue the debenture above 10 years, may issue the debenture above 10 years, but should not exceed above 30 years. Means infrastructure company means project companies can issue the debenture above the 10 years tenure, but it should not exceed the 30 years tenure. So maximum 30 years for infrastructure company, and for other company the maximum period is 10 years. Next is issued with a specified rate of interest. Debenture always issued with a specified rate of interest. This is clearly mentioned by the company in the debenture certificate in a contract, that this debenture is issued at this rate of interest. This is called coupon rate. This is called coupon rate. Next is payment of interest. As we know, normally payment of interest normally after every 6 months. 6 months normally, in the 6 months interval, company pay the interest on debenture. Normally, it is not mandatory. Company may pay the interest on debenture annually, but normally, generally, it is paid in 6 months. Means 2 times in one financial year. Suppose financial year is April to March. Obviously, financial year start from 1st April and closed on 31st March. So, first interest will be paid from 1st April to 30th September. The first interest will be paid on 30th September. And the second interest will be paid on 31st March of the next year. Suppose the rate of interest on debenture is 9%. So 4.5% will be paid for April to September, 6 months, 4.5%. And rest 4.5% from 1st October to 31st March of the next year. Debenture is generally secured by a charge on the company assets. Generally, it is charged against the company assets, but it is not necessary. Sometimes company issue the debenture without any charge. Here it is mentioned in the definitions also, whether constituting a charge on the assets of the company or not. So, but generally company issued a debenture against the charge of the company fixed assets. So, a debenture generally secured by a charge on the company assets of the company. Last one, it is also called loan capital. It is also called borrowed capital. It is also called debts capital. There are the 2 types of capital. One is owner's capital, that is issue of shares, owner's capital, and another is borrowed capital. Borrowed capital, that is debenture, bonds, and any other securities other than shares, any other securities which is issued by the company, in which the company paying interest. So it's a debenture. So debenture, definition of debenture according to section 2 subsection 30 of the Companies Act 2013, a debenture includes debenture stock, bonds, and any other securities of the company, whether constituting a charge on the company assets or not. So these are the features as well. So these features are clear. Certificate, debenture is certificate is issued by the company under the seal of the company. Okay, common seal of the company, which acknowledge the debts of the company which is taken by the company from the debenture holder. Contains debenture certificate is a contract between whom? Between the company and debenture holder regarding the repayment of sum specified, regarding the repayment of principal sum at a specified date, and till that the debenture company will pay the interest on debenture to debenture holder. Whether company earn profit or suffer losses, it is immaterial. Company have to pay interest on debenture, because interest on debenture is a financial charges. It's a charge against profit. So issue maximum period is 10 years for general company. For normal company it's a 10 year, but for infrastructure company the maximum period is 30 years. Company may issue, infrastructure company may issue the debenture above than 10 years, but it should not exceed 30 years. So up to 30 years. Next is payment of interest, normally after every 6 months. Okay, and the debenture issued with a specified rate of interest. Debenture is generally secured by the charge against the company assets, secured on company assets, and it is called debts capital. It is called borrowed capital. It comes under the borrowed capital. It is a loan capital. It is a loan capital. Now come to the next, bond. After debenture, bond. Normally bond, earlier the bond was issued by the government only. Now thereafter the bonds are issued by the non-government, means companies as well as company also issue the bond. When the company issue the bond, bond comes under the definition of debenture. But there is slightly a difference between the bond and debentures. Is it clear? Slightly difference between the bond and debenture. In bond, rate of interest is not directly given, is specified. Rate of interest is not specified in the bond certificate. The interest of bond we may calculate the interest on bond. The interest will be redemption price minus issue price. Normally bonds are issued at a deep discount. Deep discount. Bonds are issued. Suppose the face value of the bond is face value of the bond is of the bond is 100 rupees. 100. When it is issued, it is issued at a deep discount. Maybe it is issued at 70 rupees, 70. Issued at 70. So interest will be, suppose issued at 70 for 3 years. 3 years. For 3 years. The bond is, face value of the bond is 100 rupees. This is the face value, original value. And the issued value is, issued value is 70. Okay. And the term is after 3 years this will be redeemed. The amount will be paid to the bond holder after 3 years. The means tenure of the bond is 3 years, for instance. So interest will be, redemption price means original price. The bond will be redeemed at rupees 100. Redeemed at 100. And the issued price of the bond was 70. Bond is issued means company has taken money from the bond holder rupees 70. But company will repay the bond holder rupees 100. So this difference indicate 30 rupees indicate the interest. And when this 30 is divided by, it is a 3 years bond. When you divide the 30 by 3, it means 10 rupees interest every year. It's a 10% interest, 10 rupees interest every year. Okay. So you can calculate the interest through this way. Say what's the interest on bond, but in bond certificate rate of interest is not mentioned. So how will calculate the interest on bond? Normally bonds are issued at a deep discount. 100 rupees bond is issued, for instance, at 70 rupees. Means bond holder has paid the amount to company rupees 70, but at the time of redemption, the company will pay to the bond holder rupees 100. So this difference, 30 rupees difference, indicate the interest, and the tenure is, bond tenure is, period is 3 years. So you divide 30 upon 3, so 10 rupees is the interest per year. Now bond can be issued without predetermined rate of interest. Without predetermined rate of interest. Bonds are issued without predetermined rate of interest. Debentures are issued with a determined rate of interest, 5%, 10%, 12%. Okay. The example of the bond is, it may be a deep discount bond, which is called zero coupon bond. It is issued at a discount. It is issued at a deep discount. As I said, it is issued at rupees 70. 100 rupees bond is issued at 70, but at the time of redemption, the company will pay 100 rupees to the debenture holder, bond holder. Bond holder has paid the company, has given to the company, or you can say the company has taken the money from the bond holder rupees 70, but after 3 years company will pay the bond holder 100 rupees. So this difference indicate the interest. So proportionate amount of interest every year will be debited to statement of profit and loss account, because it's a financial charge. Proportionate amount, whole amount 30 rupees is not going to debit the statement of PL account in which year it is redeemed. But the proportionate amount of this 30 rupees in 3 years, 10 will be debited to statement of PL, in the statement of PL, and this comes under the financial charges. When the company prepare the statement of PL, this interest on bond will be reflected, but proportionate amount, and it's a financial charges. So whether the company is earning profit or not earning profit or suffered a loss, it is immaterial. The company have to pay the interest on bond. So that's why the proportionate amount will be charged to the statement of PL. So the proportionate amount is charged to the statement of profit and loss, every year. So how the interest is calculated by the company on bond, it is clear. Redemption price is normally the face value, and the issued price is a discounted price, heavily discounted, suppose 70 rupees. So this difference, redemption price, when the company will pay the amount to the debenture holder, a bond holder, company will pay 100, and company has issued at rupees 70, company has taken 70 rupees from them. So this difference indicate the interest. Suppose the redemption issued price is 65, then interest is how much? Interest will be 100 minus 65, so it is 35 is the interest for 3 years. For 3 years it's interest. So divided by 3, you will get the interest of every month. So that will be the financial charges. This will be proportionately charged against the profit of the company. So it's showing, with this amount will be shown by us in the statement of profit and loss. Okay. Now we will see the different types of debenture. How many different types of debenture the company issued? The company issued the different types of debenture as per the need of the investors' need, or as per the need of the, or as per the requirement of the company. Company issue the debentures accordingly. So first debenture is secured debenture. What is secured debenture? When the company has given any security against the issue of such debenture. When the company is issuing debenture and company has given any security of a fixed assets, particular fixed assets, or not particular, all assets of the company, Maybe sometimes all assets of the company is given as a security. So it may be a fixed or it may be a floating securities. If any particular assets is given, then it's a fixed assets, particular fixed assets is given as a security. Sometimes company is not given any particular fixed assets as a security. Sometimes company is given overall assets of the company, then it is called floating charges. So here the secured debentures means when the company issue the debenture either on a particular assets of the company called fixed charge or on all assets of the company in general called a floating charges. And if the company, suppose the company failed to pay the amount to the debenture holder on maturity, then what will happen? The security which is given to the debenture holder, that assets will be sold and money will be paid to the debenture holder. Suppose company going to liquidate. So on the date of liquidation, when the company is going for a liquidations, company is going to wind up, then that assets will be sold, and whatever the amount realized by the sale of that assets, the first amount will be given or repay by the company to the secured debenture. Money will be refunded first because it's a secured creditors. They are secured creditors, secured debentures. So if the company failed to pay the amount to the debenture holder on maturity, then on that case, that particular assets which is given as a security at the time of issue of debenture, that assets from the money will be realized from that assets. By the sale of that assets, the money will be realized by the company. Okay, it means when the company is going to wind up or company is on liquidations, then the process of liquidation is what? Company will sell his assets, and whatever the money realized, from that money the company will repay first to the secured debentures, secured creditors. So secured debentures means the security is given to the debenture holder. That security is maybe the fixed assets, particular fixed assets, or fixed assets in or all the assets of the company in general. If it is all the assets of the company, then it is called floating charge. Otherwise, it is a particular fixed asset, then it's a fixed charge. Suppose the land and building, plant and machinery is given, then it's a fixed charges. And in general, all the assets of the company, then it is called floating charges. Sometimes the company issue debenture on a particular assets, suppose land and building. And again, when the company issue the second debenture, also land and building is given as a security. So land and building is given as a security to both type of the first debenture is also to the first debenture company is given land and building as a security, and to the second, when the second debenture is issued, again the land and building is given as a security. Suppose company is going to wind up, company is going to liquidate. By the sale of that assets, first the amount will be repaid to the first debenture, then amount will be paid to the second debenture. Okay. Next is unsecured debenture, which is also called naked debenture. Unsecured debenture is also called naked debenture. These debentures are those which are not given any security, The holder of such debentures are treated as unsecured creditors. They are treated as unsecured creditors. Is it clear? At the time of liquidation of the company, they will be treated as unsecured creditors. Means when the company is wind up or company is going to liquidate, then the amount realized by the sale of assets, that amount will be used to pay the secured debenture first. Thereafter, amount will be paid to unsecured debentures. Is it clear? Thereafter, the amount will be paid to the unsecured debenture. If no information is given in the question whether it is debenture is secured or unsecured, then we will presume that it's a secured debenture. Next is registered debenture. Next is registered debenture. In the registered debenture, name and address of the debenture holder is registered in the register of the debenture holder. Interest and the principal amount will only be paid to the person whose name is registered in the debenture registered. It means these debentures are not easily transferable. This can only be transferred to the other party. Such transfer requires the execution of proper transfer deed is required. If the debenture holder want to transfer the debenture to the third party, the proper transfer deed is required, and accordingly the name has to be changed in the register of the company. Debenture register of the company name also be changed. If name is not changed and you have transferred the debenture to somebody else, then that person will not get the interest and the principal amount. Only the interest and principal amount will be given by the company whose name is in the register. That's why it is called registered debenture. The name and address of the debenture holder is registered in the company register, debenture holder register. So transfer, if the debenture holder want to transfer the certificate, he cannot transfer. At the time of transfer, he has to take the transfer deed, go through the legal process, transfer deed, and thereafter change the name in the register. Then only the person to whom the debenture is given, that person will get the interest and the principal amount. So registered debenture means name and address of the holders of such debentures are recorded in a register of the company called Register of Debentures. Such debentures are not freely transferable, not freely transferable. Such debentures are not, this type of debentures are not freely transferable. If we want to transfer, the execution of proper transfer deed is required. Is it clear? Now next is bearer debenture. Bearer debenture. Bearer debenture is just opposite of the registered debenture, just opposite. Bearer debenture means in the bearer debenture, name and address of the holder are not registered in the debenture holder register. Here it is not registered. Name and address of the debenture holder are not registered in the debenture holder register. So if the debenture holder want to transfer it, they can easily transfer to the anyone else. Anyone else. It is here the name and address need not, it is not required to change, need not required to change in the register. Okay, this is freely transferable, freely transferable, and the person who have this debenture certificate and coupons, he or she will produce that coupon or debenture certificate, they will get the interest and they will get the principal amount. So here the name is not registered in the debenture holder registered. So transfer is easily merely delivery. You deliver the certificate to somebody else, that person will get the interest and that person will get the principal amount. Because debenture is certificate, there is a coupon is attached. So when that person produce that coupon or produce that certificate, whosoever produce the certificate or produce the coupon, that person will get the interest and that person will get the principal amount of the debenture. So this is just opposite of the registered debenture. That's why it is called bearer debenture. easy to transfer because name and address of the debenture holder are not registered in the register of the debenture holder. Okay, redeemable debenture. Redeemable debentures are those debentures which can be redeemed after certain years. If the debenture can be redeemed after certain year, the repayment of the debenture amount, if the debenture holder will get it after a specified period or on a specified period, then it is called redeemable debenture. It means this type of debenture can be redeemed after a specified period or on a specified period. This is called redeemable debenture. Irredeemable debenture or perpetual debenture is just opposite of redeemable. If the debenture will not be redeemed during the lifetime of the company, if it is not redeemed, if this will not be redeemed, then it is called irredeemable debenture or perpetual debentures. Is it clear? Redeemable debenture means the amount of the debenture will be redeemed, means repay to the debenture holder, maybe in lump sum, whole amount will be paid at a time, or amount may be paid by the company in installments. Suppose 1 lakh debenture is issued for 5 years. So after 5 years, the 1 lakh will be paid at a time, or company will pay this 1 lakh maybe in 5 installment, 20,000, 5 equal installment, 20, 20, 20 in 5 installment. So 20,000 will be paid 5 times. Okay. So the amount may be redeemed by the company at a time, whole amount in lump sum, or that amount may be paid by the company in installment. But here in irredeemable or perpetual debenture, debentures amount debenture amount will not be refunded by the company. Company is not going to repay this amount to the debenture holder during the lifetime of the company. During the lifetime of the company is not going to repay that amount. That amount will only be repaid by the company when company is going to wind up. Okay. Otherwise, that amount will not be repaid to the debenture holder. That's why it is called irredeemable debenture. Now next is convertible debenture. When debentures are converted into any other securities, maybe debentures may be converted into equity share or preference shares or new class of debenture, then it is called convertible debenture. Sometimes it may be happen that some part will be converted, some part will not be converted. Suppose out of 100, 40% will be converted and 60% will not be converted. So 40% will be called convertible debenture and 60% will be called non-convertible debentures. So non-convertible debentures are those debentures which cannot be converted into any other security. Means this cannot be converted into equity share, this cannot be converted into preference share, this cannot be converted into new class of debenture or bonds. Then it is called non-convertible debentures. So these are the different types of debentures: secured debenture, unsecured debenture, registered debenture, bearer debentures, redeemable debentures, non-redeemable debenture, irredeemable debenture, that is called perpetual debentures, convertible debentures and non-convertible debenture. There are so many types of debenture which is issued by the company according to the need of the company and according to the requirement or expectation of the investors. According to this suitability, as per the suitability of the company and investors, the company issue the different type of debenture to the debenture holder.